Well, welcome back, everybody. I'm thrilled that you are sticking with us throughout the program, and this is going to be one of the most dynamic sessions of our entire day. Why all institutional investors are going to own Bitcoin, and I'm very happy to be joined by two illustrious gentlemen, Anthony Scaramucci, the founder of SkyBridge Capital, and Michael Saylor, the chairman and CEO of MicroStrategy. You know both of these guys very well. Anthony, the founder and managing partner of SkyBridge Capital, the founder of SALT, a global thought leadership forum. SkyBridge is the largest fund of funds to make an allocation of Bitcoin, now has $600 million of crypto exposure in its flagship funds. And Michael Saylor, the chairman and CEO of MicroStrategy, publicly traded, ticker MSTR, a business intelligence firm he founded way back in 1989. He's also the founder of Alarm.com and the named inventor on more than 40 patents and author of the book, The Mobile Wave. He founded the Saylor Academy, a nonprofit that's given free education to more than 800,000 students. Michael has dual degrees from MIT in aerospace engineering and the history of science. Welcome, Michael and Anthony. Good to have you both.
Yeah, great. Thanks for having us.
Great to be here. It's great to be with both of you.
Michael, let me start off with you because what you've done is unique, I think, in the marketplace. Publicly traded company, one of the major business information sciences companies offer available on a global basis. You've placed a significant, that's an understatement, a portion of your company's reserves into Bitcoin. I think it's now $6.5 billion in value. Tell us why you did that.
Why? Well, look, we had $500 million business growing 0% a year. We had a $500 million treasury paying 0% interest a year. When the lockdowns came, we realized that we could generate about $100 million a year in cash. And we also realized that the money was going to lose about 20% of its purchasing power a year. And my simplistic math was 2,000 people work for a year to make $100 million bucks, and then we lose it all because of inflation, which meant that if we work forever, we get nowhere. Or to use a famous phrase, the road to serfdom is working exponentially harder for a currency growing exponentially weaker. So we decided that rather than stay on that rat race, we had to do something. And the big observation is that most balance sheets of corporations are composed of cash and credit. And I would say they're crumbling cash and credit. If you're sitting on 500 million in cash and treasuries and you're getting a effective 1% yield or 2% yield or less, you would, if you wanted less than 5-year duration, you can't even get 1% yield. So in that environment, you got a negative real yield of minus 15%, minus 20%. The S&P 500 is up 25% year over year. So your cost of capital is 25% on the money. You're getting 1% yield. You're minus 24%. So you're destroying shareholder value at a ridiculous rate. We decided we either had to give the money back to the shareholders or we had to invest it. We split the difference. We offered to give half of it back to the shareholders in a Dutch auction. And then we took the other 250 million and we bought Bitcoin with it because that was the hardest asset, the highest quality property that we felt we could find as an inflation hedge. The strategy worked well. The shareholders loved the idea. So they didn't tender all 250 million worth of shares. And we ended up with 175 million more in cash. We invested that in Bitcoin. We had 425 million in Bitcoin. Bitcoin traded up. Then we had $1 billion in Bitcoin. You know, we generated a bunch of cash flow. We sold some convertible debt. Then we had 2 billion in Bitcoin. Bitcoin traded up. We raised another $1 billion at 0% interest, bought some more Bitcoin. You know, it kept going, then it traded down. So we issued 500 million in senior debt at 6 1/8% interest. And we bought Bitcoin in the mid 30s. Traded up a little bit more. We sold $400 million of equity. We bought some more Bitcoin in the mid 40s. Now Bitcoin's above 60,000. To make a long story short, we got a $500 million software business growing maybe 10% a year, generating 100 million in cash flow. And we have a $7 point something billion digital property business growing at the rate of Bitcoin. And we've transformed ourselves sort of into, into a property development company, but the property is digital property in cyberspace. And we keep, and the core business remains the same and is better than ever because it's been helped with the halo of the Bitcoin strategy.
So you've encouraged other companies to do likewise. What's the reaction been of other CEOs and corporate treasurers?
I think we're doing great. I mean, a year and a half ago, no public companies had any Bitcoin. By the end of this year, there'll be 36 public companies. And you got a dozen Bitcoin miners coming public. You got Bitcoin miners buying Bitcoin. You got Square and Tesla buying Bitcoin. You got the ETFs coming out. Yeah. So I feel like we're having about as good a progress as we can have in 12 months. But we're 1 year into a 10-year run, right?
And so do you have a number in mind of what you think is going to be at that end of the 10 years of what Bitcoin's price might be?
Look, my view of Bitcoin is if you value it as digital gold, it's better gold than gold, as Anthony has said before, and that makes it worth 20 trillion. And if you think of it as digital property, like a digital hotel in cyberspace or digital real estate, well, it's going to demonetize a lot of real estate and a lot of property, and that makes it worth 100 trillion. And if you think of it as digital money or digital energy, because you're going to move it 1 million times a second and split, when the hotel gets split into 1 million little hotel minutes and rented out around the world and recomposed and moves at the speed of light, then I think it's worth a lot more than the 100 trillion. It becomes worth a $250 trillion plus thing. So I think Bitcoin's going to go up with volatility and cyclicality over time. And
so let's just put this in
all of our lives.
Let's put this into context. On the low end, you said 10 trillion. On the high end, 250 trillion. Bitcoin's market cap today is 1.5 trillion.
Yeah.
So you're looking at substantial upside, 10x to 200x. Anthony, you did something at SkyBridge that is equally.
Do I have to speak because I could listen to Michael Saylor all day and night? So you
Anthony,
sure you want me to speak because
Anthony,
Michael's doing a great job.
Yeah. Anthony, you have to speak. So
okay, go ahead.
But you can only speak to the question that I ask.
All right, go ahead.
You did something equally unusual as Michael. You decided to put Bitcoin and later Ethereum as well into your flagship funds at SkyBridge. So talk about your thinking, because you had a different journey and a different logic stream than Michael's.
Well, my journey actually starts with Michael Saylor. I think he may remember this. I listened to him on a podcast about his investment in Bitcoin, and I reached out to a mutual friend, and I asked Michael if I could have a phone conversation with him, and then we did that. And then I asked Michael if he could join me on a Salt Talk series, and he did that as well. And Michael, I think, brought me, frankly, to my eureka moment. So even though I'm not a corporation in that several dozen corporations that Michael's referencing, I want to say thank you to Michael here in this public forum for helping me see what he saw. And Michael basically explained to me something that is seminal that I think needs to be repeated everywhere, that Bitcoin itself is a network. And if you understand the exponential growth capabilities of the Bitcoin network and how fast it's grown since its inception, outpacing other networks like Google, Facebook, Amazon, other types of networks that work off of Metcalfe's law. And then Michael also brought up something to me, which I'm sure he'll remember. He said, well, let's take Coca-Cola. And suppose we destroyed Coca-Cola tonight, and we had the words Coca-Cola. Could we restart Coca-Cola? And of course, the answer is yes. So he was using the example of an old-fashioned network. And I don't know how many wallets there are now, Bitcoin. We can guess at that. There's probably between 180 and 250 million wallets from our best guesstimate here at SkyBridge. And if Kathy Wood is correct, it goes to 1 billion, Rick. We'll be well over $500,000 a coin at that moment because of the scarcity. So first off, I want to say thank you to Michael. One of the more brilliant things that Michael has done in his life is shared his insights with other people. His institutional forum, I don't know, Michael, was that 6 months ago or 8 months ago, was one of the more brilliant things that I participated in. And, you know, we need people like Michael to explain to people who are conditioned for the temporal world where we're going and why we're going there and how we're getting there way faster than people originally expected. And I'll just say one last thing. We are so early. It is mind-bogglingly early because you have some of the elder statesmen of the financial services community, whether it's a Warren Buffett, a Charlie Munger, or Jamie Dimon, who still have not spent the time on this. And what I would encourage everybody listening into, please spend the time on it, because if you spend the time on it like Ray Dalio did or others, you end up owning some of it. And I think it's worthwhile for yourselves, your portfolio, and your team.
So when you did this, Michael, what was the reaction that you got from current investors in your fund and prospective investors you were trying to get them to invest? What was their reaction to you putting a significant portion of the portfolio into Bitcoin?
You know, I think that everybody goes through this learning process, and, you know, first people, if I'd done this before March of 2020, they would have said, you're out of your mind. But, you know, if you'd asked me about this in February of 2020, I would have said, why even asking me this? I wouldn't have even considered it. So I think that people weren't ready to embrace this idea before March of 2020. But after March of 2020, if you said, hey, I have an idea, I think everybody will work from home and we'll Zoom everywhere, and I'm going to try something new in my business, you would have said, well, you know, there's a war on COVID. It's a difficult time. I guess you got to try new things. So I think that people became more open-minded after March. And we started from a point of view of open-mindedness. My board was open-minded, but it took them a while to get educated. And then with our outside investors, we didn't know how they would view it. We're a public company, so we took the safest course. We created a Dutch auction, and we said, we telegraphed what we're going to do. And we said, this is our strategy. If you don't like it, we'll buy you out. And we waited 20 days. And this, by the way, we offered the Dutch auction at 140 a share. The stock was trading 120. The stock traded between 130 and 140 for a while. People weren't sure the auction was going to go off. And then they came to their senses and they're like, wait a minute, the 140 is a put. The stock should be above 140. Then it traded above 140. And we didn't know whether we'd have 250 million tendered or nothing. And we only got 60 million tendered. So what that tells you is, at the end of the day, all but $60 million worth of the shareholders decided that they liked the strategy, or at least they would try it. And they tried it in the 150, and then the stock went to 160, and then it went to 180, and then it went to 200. And then around 220, I think Citron wrote some kind of report on Bitcoin. And then people started thinking that, well, maybe this wasn't a bad idea after all. This might start working. And if you ask the shareholders how they felt about it then, they would have given you a different answer than during the Dutch auction. Let me tell you, I met with 10 shareholders during the Dutch auction now. On a standard investor conference. And I thought, I went into 9 of the 10 were positive. And I went into one meeting and my head of investor relations said, this person's really not liking this strategy. He's asked a lot of questions about it. So get ready for a difficult meeting. And so I went in there all suited up for battle. And he said, tell me about Bitcoin. And I said, well, it's a digital monetary network and we want to use it as a currency inflation hedge, blah, blah, blah. And this is technically why I like it. And he goes, oh yeah, I already know all that. I own Bitcoin. And I thought, well, why you beating me up on this? And then he wasn't. And then I thought, why are my investor relations people telling me to be worried? And what I realized is Bitcoin is one of those things where everybody just kind of feels the need to ask the question, have you thought it through? And so this guy's asking the question so he can tell his investment committee that he did his due diligence. Right. And my investor relations people are asking the question so they can say they did their due diligence. And my lawyers and my lawyers' lawyers are asking questions so they could all check the box that they did due diligence. But when you poked, I got to tell you, I met so many people that after they said, you know, how are you going to do it? How are you going to custody it? How you think? They're like, oh yeah, good idea. I own Bitcoin. And so I think the consumers figured it out, but getting the institutions around, it's like I met guys that bought $25 million worth of my stock or worth of my debt. And it was the first time they had the ability to buy a Bitcoin security, but they had been Bitcoin believers for years before. And so institutions come later to the game than the retail, just because there's more inertia.
And because their jobs are on the line. They're not going to personally profit if they're right, but they'll get fired if they're wrong.
So it's totally reasonable. Yeah, I mean, you know the journey of financial advisors, you know, and you know the journey of the big banks, and you know the journey of the ETF. And even within the ETF, you know, Gensler says, well, Bitcoin futures have been trading on the CME for 3-4 years. So we felt more comfortable going with that ETF vehicle because we have more time, you know, studying that one. The world, I think what happens here, Rick, people forget that what they're missing is this is a technology. This is the creation of digital property or digital energy, or, you know, and I mean, digital gold is a small thing. Digital property and digital energy is a big thing. If I told you I invented electrical energy, you know, and by the way, John D. Rockefeller invented chemical energy. He put energy in a bottle called Standard Oil. If you think about Standard Oil, what the name means is he standardized the delivery of chemical energy in a container so that it was clean and predictable. So John D. Rockefeller standardized something. It took 40 years, 50 years for people to get their head around what that meant. When electricity came along, if I knocked on doors in New York City and I said, hey, I got electricity, lightning in a bottle, you can put it in your, you know, in your house, in your ship, in your, you know, sewing machine factory, in your restaurant. Are you ready? You know, people in the first year aren't going to get that one either. Right? Someone's going to burn their house down. Someone's going to get electrocuted. Something's going to catch fire. Someone's going to say, don't let that guy put that in my neighborhood. Could you imagine going into your apartment in New York City in 1905 and saying, I want my apartment to be the first one wired for electricity? So I mean, the point is, other major breakthroughs in energy also took decade or decades. And it's totally reasonable that maybe the lone investor, you know, they go first in the small business and then the larger business and then the small city and then the larger city and then the company, and everybody finds their way to the future.
You know, it's interesting you mentioned oil. People tend to forget that oil was the newest asset class until Bitcoin came along. And oil goes back 150 years. When discovered in Texas and then Saudi Arabia. And we look at the impact on the global economy as a result of the discovery of oil. And now we have the invention of Bitcoin, which is the only other new asset class ever devised since oil itself. And so the transformative power of this is quite remarkable. Anthony, did you have a similar experience when you first decided to put Bitcoin into your hedge fund? What reaction did you get from clients and prospective clients?
We got sold out at Merrill Lynch. Wells Fargo said, okay, no more there. We've been put on hold at other wirehouses. And we did the calculation. We said, okay, if these wirehouses are going to sell us out or recommend a sale, how many smart FAs are willing to stay in alongside of us? Who will leave? And then subtract that to what we think the appreciation is in Bitcoin. And this is more or less what Michael did with the Dux auction that he referenced. So, you know, we had people leave and it was worth it. I had a call this morning with a very large institution in the Middle East who thanked us. It's a year later. And they said, you know, We just want to thank you for bringing us into the 22nd century. We were kicking and screaming, and we debated over the last 4 quarters redeeming on your fund. But ultimately, we're now adding to the position. So, everybody gets to their eureka moment at different times. And I think, Michael and I, when we first had this conversation, I think Michael said to me his eureka moment was about 8 or 10,000 a coin. I don't know if that's correct, Michael, but it was somewhere in that ballpark. I got there at 17,000 a coin. And we're both sitting here at 63,000 a coin. And we know how early it is at 63,000 a coin. And Cesaris said at the SALT conference last month that anybody that buys this below $500,000 a coin is going to be very, very happy. And so we're very, very early in this whole revolution.
And in fact, at the SALT conference last month, you devoted a lot of the agenda to crypto and DeFi. Why?
Well, I mean, to me, one of the responsibilities we have with that conference, remember, it's an open source system. The editorial content is open source. We invite every single one of our competitors. I believe in collaboration, not in competition. And I'm always searching for the subject material that I believe our industry needs to learn about. So it could have been, 2016, it would have been policy, perhaps. In 2018, it was programmable biology, how we're changing the world with plant-based proteins, which could have a big effect on our ecology as well. And in 2021, it became very clear to me that the industry, the hedge fund industry, needs to get up the curve on digital assets. And so, we had the Sam Bankman-Frieds of the world. Unfortunately, Michael had a schedule conflict. We would have loved to have had him, but we had Pete Brigger and Cesaris and a whole host of different people, Dan Moorhead from Pantera, coming to at least explain to people what Michael already knows and what you already know, Rick. This is a delayering mechanism. Okay, imagine Bitcoin helping the underbanked, helping Latin American countries, taking out the permission to make the transaction. Sam Bankman-Fried said something from the stage, and he's a lot smarter than me, so he could actually name all of them. But he said, if you want to buy a stock and you want it to go into your account, it has to go through 7 different entities before it gets to your account. Imagine over the blockchain where it could go to one entity and the transaction speeds associated with the blockchain. And so this is a massive, you talk about technology, okay? Think about Michael said, it's energy in a bottle from Rockefeller or electricity. Imagine this as a delayering mechanism for the society. So it's actually going to reduce energy. It's going to delayer us and make us more efficient. And it's going to be a store of value like nothing we've ever seen before, because we know, unfortunately, that our currencies over 5,500 years ultimately get corrupted by politicians and policymakers. And because of the way this thing has been beautifully engineered, that can't happen to it.
So this conversation has been really focused so far specifically on Bitcoin. And Michael, in fact, you own Bitcoin and nothing but Bitcoin. No Ethereum, no DeFi, no other coins, etc. Is that still your view, Michael, that it's Bitcoin, nothing but Bitcoin?
Look, our business strategy is we're a Bitcoin property company. So we acquire and we hold Bitcoin. It takes a lot of effort and energy to do the diligence and go through the accounting and the legal and the security and the operational exercise to safely and efficiently acquire and hold Bitcoin. You can't underestimate that. So once we get that, and it took a lot of energy for us to adjust, to rotate our shareholder base, right? So like, if it took me a year to get a shareholder base that was comfortable owning Bitcoin, the last thing I want to do is go back to my shareholder base and say, oh yeah, I'm also doing baseball cards and NFTs, and I'm going to do some rare art, or I'm going to do some venture capital, right? So we're a public company. And once we have a good idea like Bitcoin, if Bitcoin's going up a factor of 100, all I got to do is hold it, right? But if you told me Bitcoin is only going to go up by a factor of 10, if I've got a public company, my strategy is I'm just going to lever it, right? So I mean, just show me alpha. If you're going to give me plus 10%, okay, I lever it 10 to 1, I get plus 100%. So our strategy is a levered long Bitcoin strategy because of the operational and the financial and securities elements related to a public company participating in this space.
Well, let me make sure I understand this, because you still have a very robust, solid business software services intelligence firm that operates on a global basis and generates billions of dollars of revenue.
Right.
But you're regarding yourself, I think Wall Street analysts are regarding MicroStrategy as a Bitcoin proxy. It's almost like they're ignoring your business services company.
Well, we've got two. Every business has an operational or a P&L component, an earnings strategy, and it also has a balance sheet strategy. Right? If you're a dentist and you make 500, or a doctor, you make 500 grand a year and you have 500 grand in the bank, you've got an earnings strategy, you're a doctor, and you have a saving strategy. You buy Bitcoin, you buy the peso, you buy the Bolivar, right? You buy the S&P index. Don't guess wrong, or you work for a lifetime and lose all your savings. But on the other hand, there's always the story of the doctor that invested intelligently, bought a city block in Manhattan, and his grandchildren are, living high on the hog, right? Because granddaddy made good investments. So we've got a strategy, software, we keep it, and we got a balance sheet strategy, Bitcoin, and they work together. It happens that our stock, is probably more valued on the Bitcoin than it is on the software, but that's because Bitcoin has grown 400% this year and is growing 130% a year and is a dominant, disruptive digital monetary network, which is a near monopoly. And our software company competes with Microsoft and Oracle and SAP and IBM, and we are not 100% growing digital monopoly, right? If I was Facebook or Google or Apple, maybe I could get by without having a good balance sheet strategy. But the average person, the normal person, needs a strategy to save their wealth, and Bitcoin is a good strategy for that.
Now, Anthony, you have a different perspective because you don't have a business strategy per se. You are an investment company, and you are just making investments with your clients' assets. So you own Bitcoin, but you also own Ethereum. So talk about your strategy there.
Well, I also own Algorand as well. I have 3 coins effectively, and I see the world very similarly to Michael, but again, I'm in a different business. And so because I'm an asset manager, there's more diversity to the mix of the capital that we're allocating. They could buy MicroStrategy as an example if they want a pure play on Bitcoin. And by the way, I will point out that MicroStrategy in our ETF is our largest holding. I think it's Coinbase and MicroStrategy are equally weighted because in our ETF, which is a publicly traded blend of publicly traded securities, I'm trying to get the maximum correlation to Bitcoin. And in Michael's company, he is correct. I think most security analysts are looking at it as a Bitcoin proxy. So I'm very proud holder of MicroStrategy in our UIT business and our ETF, but being a little bit more broad and having an asset allocation mandate, I looked, very hard over the last year and decided that there are use cases for Ethereum and for Algorand. I think the technical properties of those make them very interesting, and I think they survive. And I'm going to quote Michael Saylor here because it always rings in my head. Bitcoin is the apex predator of the space. Bitcoin has withstood 8,500 or so attacks on its competitive position as the premier asset on the blockchain. And I think Michael's going to be right that it will maintain that status. I don't see a flippening or a toppling of Bitcoin, but I would think because these are technologies, I make them in my mind akin to different systems. There's a Oracle ecosystem around relational software in that database. There's a cloud system around things like Microsoft or say Amazon. And so I do think that there are technical properties associated with a few other tokens that will revolutionize the landscape of how we value things in the future. So Bitcoin will likely be the apex predator. I predict that, but there'll be a few others that will be up there alongside of it.
Before we get to the subject of Bitcoin futures, since that's hot and heavy with the launch this week, Anthony, I want you to elaborate a little bit for us on the various products that you have available, because I think you're widely known as a hedge fund guy, and that is obviously a fund for accredited investors, but you briefly mentioned the ETF. So talk about the different products you have, who the target audiences are, the investment minimums, and all that kind of good stuff, because a lot of the advisors watching this right now be very interested to know how you can provide them access to this asset class on behalf of their clients.
So, quickly, Series G, our core product, we started 17 years ago with the goal of democratizing the hedge fund industry. So if you wanted access to things like Dan Loeb or Steve Cohen, or guys like Izzy Englander at Millennium, you could come to us. Our minimums are 25 to 50,000, depending on the wirehouse, and we would allocate money to those hedge fund managers. And today, my 4% position in Bitcoin has grown to about 18% of that fund. And so you could get Bitcoin exposure and some of the best hedge fund managers in the world in that fund. If you wanted pure Bitcoin exposure, we have a private fund called the First Trust SkyBridge Bitcoin Fund. I am hoping that will be converted into a cash ETF. We have an application in. We have the same thing for Ethereum. And on December 1st, we're launching our Algorand fund. And then just our last product is CRPT, or Crypt. It trades on the New York Stock Exchange. It's 30 securities, basically. But Michael's company represents the largest block of ownership in our ETF, because again, the goal there was, we talked to pension fund managers, FAs. They say, geez, I can't really own Bitcoin. We're being blocked by compliance or our legal team. And so we synthetically created an ETF that's liquid, that is as close of a correlation to Bitcoin as anything in the marketplace.
And point of disclosure, I'm an investor in several of your funds, a fan of what you're doing, and also in MicroStrategy as well. So let's shift over to Bitcoin futures ETF, because Anthony, you have not filed for launching one of those, I don't believe. So talk about your perspective, and Michael, I'll ask you next the same thing. What's your view of the Bitcoin futures ETF that we now see on the marketplace?
Well, I would love to hear Michael's thoughts. I'm going to be very brief. To me, having been in the hedge fund industry and understanding the futures markets and the way things settle relative to cash, they're creating a lot of friction and a major arbitrage opportunity there. I get Commissioner Gensler's point about wanting to be there because of the regulatory oversight. And I don't think they're ready to make the cash ETF available because they're concerned about the way pricing works in Bitcoin. I get that. But I think that there's a flaw in that system. I would have recommended that they did both. And I'm willing to wait. I would rather own, just speaking candidly, I would rather own MicroStrategy than a Bitcoin futures fund. So that's just my personal bias there.
Michael? Did we lose Michael?
No, I think we got you on mute, Mike.
Oh, sorry.
Yeah, that's
In
okay.
my travels around the world, there are institutions that have trillions and trillions of dollars. And when you ask them about Bitcoin, they say, well, I'm worried that if it's so good, somebody might ban it. And that was the Ray Dalio argument for a while, which is it's just too good. If what you describe is true, it's a better gold than gold. And if it really is digital energy or digital property, it's so good, someone will ban it. So that's been holding back hundreds of billions and trillions of dollars. Because how do you deal with that? And I think that in the past couple of months, you had Jerome Powell and you had Gary Gensler say it's an asset. It's a speculative asset, but it's an asset. And if you want to own it, you can own it. We're not going to ban it. And I thought that was a big green check for the space. Just getting, and a lot of people aren't over that yet, Rick. There are a lot of people that still don't know that the head of the EU Central Bank, the head of the Fed, and the head of the SEC have all clarified it's an asset. We're not going to ban it. You can own it. I think the second check clearly is the SEC and the regulators endorsing companies and any kind of corporation that is handling Bitcoin. So the fact that Coinbase came public, right, and they're holding Bitcoin is a big green check. I think that the significance of this ETF is this is this ETF, another ETF that had had Bitcoin companies like MicroStrategy in it was approved by the SEC. That's a big green check. And so the fundamental observation is, okay, well, the regulators are normalizing the asset, and they're allowing the fact that you're allowed to hold the asset and no one is going to snatch it away from you and steal it from you. That is probably worth 10 to 100x in Bitcoin. Now we get to the question of how do you want to hold Bitcoin? And, Anthony has a fund. It's an application. He's got multiple applications on Bitcoin, and they're working really well because Bitcoin is fueling them. And MicroStrategy is a Bitcoin application. Our strategy is some debt, levered with debt, with equity, with cash flows. We're not a Bitcoin miner. That's working. Our stock's up by a factor of 5 or whatever. They're Bitcoin miners. They're a different application. There are other Bitcoin funds. This ETF, it's another application. You've also got, Square and PayPal and Coinbase, and they're offering you a different, way to get to Bitcoin, different application. Is it the best application? Well, if the only thing you can buy is this thing, then yes, it is. There are some companies that don't want to own an ETF, but they want to own an operating company like MicroStrategy. Like I've got investors that say we'd rather own MicroStrategy than an ETF. But there are other investors who will say we really want to own the ETF. We don't want to own the operating company. And there are others that'll say, we want to own the underlying property. And they all have reasons. And, I think there will be unpeeling of the onion. This is the first. Nobody thinks this will be the last, right? The real message is you can't imagine the SEC approving one and stopping when there's like, what are they, Anthony, 27 in the hopper or something?
Yeah, there's currently about 30 now in the hopper.
Okay.
Yep.
Right. So this is a 0 to 1 moment. I think that the great 90% of large macro investors that have not invested in Bitcoin didn't do it because they heard that either Jamie Dimon or Ray Dalio said it's so good the government will probably regulate it. And so it is the number one reason why billions and billions. Like you asked the question, why you got 50 billion in a fund? Why haven't you bought 10 billion of Bitcoin? You got 5 billion in gold. Why haven't you sold all the gold and bought Bitcoin? Like gold is up 0% in a decade and down 7% or 8% in a year. Why hasn't everybody that holds any gold sold it all to buy Bitcoin? And the number one answer is it's new. We don't trust it. We think the government's going to regulate it or ban it. And so I think that this is a seminal event. But in terms of like, is this the ETF that I would buy? Well, if you're going to own the property, then no, you want the property. But then again, everybody's got different views. And if you gave me a choice and I could buy $50 million of this in 15 seconds and do it with a regulated custodian per my charter, or I could spend a year negotiating with new counterparties and change the charter. Well, if you spent a year, you bought Bitcoin at 63,000 instead of at 10,000. maybe you would rather have the inefficient vehicle and get it for half price.
So I think that as you pointed out, that the introduction of the Bitcoin futures ETF was a convenience play by the SEC. They clearly have regulatory jurisdiction over the futures market. They don't have such clarity over the Bitcoin market. The SEC has declared Bitcoin's not a security. So Gensler has said very clearly he thinks he needs clarity from Congress to be able to regulate in this space more effectively. And a Bitcoin futures ETF is a proxy that serves the SEC's goals. I'm not as convinced that it serves the benefit of the ordinary everyday consumer. Those who are sophisticated investors who are familiar with the options and futures markets, they'll get it, they'll understand this, and they can perhaps use this to their advantage. But for the ordinary everyday consumer, I guess the equivalent that I give is that if you as an advisor have your clients invested in stocks, how often are you telling your clients to buy stock futures? Or how often are you putting your clients into an S&P 500 futures fund? Not too many. Most are buying the S&P. So if you're not buying futures in the stock market, why suddenly do you want to buy futures in the Bitcoin market?
Rick, I think there's remarkable consensus and broad-based consensus on two topics of institutional interest here regarding Bitcoin. The first topic is with regard to accounting. The current accounting is indefinite and tangible, and there's a broad-based consensus that it should be fair value accounting. And if the accounting went from indefinite and tangible to fair value accounting, I think that it would be a green light to cause a lot of capital to flow into the asset class. I think equally, there's a broad-based consensus that the market would prefer a physical settled Bitcoin ETF, an ETF they could buy where it was backed by the underlying property with, the most efficient fee structure they could find. And if they had that, a low fee, physically settled Bitcoin ETF, that would also be a green light for large amounts of institutional capital. Now we can either sit back here and complain and moan and lament the fact that the accounting is a little bit optically obscure and that the ETF is a little bit complicated and wait, or we can turn it around and say, the only reason I'm able to buy this asset so cheaply is because the accounting is a little bit obscure and there's no easy ETF. And so maybe this is not a liability. This is nature's way of giving you a chance at alpha, because if those two things get fixed, and if I was a betting man, I would bet that they will be fixed sometime in the not distant future. When they are fixed, then you're going to see the floodgates open up, because you've green lighted huge amounts of institutional capital to come in an easy fashion. Until they get fixed, well, I guess there's a market for analysts to figure out, how bad they are, right? And then, if you want to figure out MicroStrategy's P&L and balance sheet, you got to do a little bit of work. You got to read the pro formas. And if you want to manage your Bitcoin exposure, you got to pick your way through various options. It's a bit harder. And that's kind of capitalism for you.
And so the fact is, we now have diminishing excuses for sitting on the sidelines. Investors and advisors used to say, I want to wait for a Bitcoin ETF before I invest because I don't want to go buy, I don't want to open a Coinbase account or Gemini or Kraken. I don't want to go through all that effort and hassle. I don't know how, et cetera, et cetera. So I'm waiting for the ETF. Well, those waiting days are really gone. You now have an ETF available from SkyBridge. You have a hedge fund for accredited investors available from SkyBridge. You can go invest directly in MicroStrategy, which is widely regarded as a Bitcoin proxy, publicly traded. So there's really not a legitimate reason to be able to say, I'm going to continue to sit on the sidelines. You either need to make a decision that you're going to invest, and if so, do it, or you're going to make a decision, I don't believe in this asset class, and I'm going to continue to be in denial. like Jamie Dimon or Warren Buffett, and some
You know-
others. So
Rick, there's two phrases in this business. One of them, everybody gets Bitcoin at the price they deserve. Right?
that's true.
And, and I jumped through hoops to set up a custodial accounts and went through quite a bit of work so that I could buy Bitcoin at 9,500 a coin. And if you were waiting until you got a convenient ETF, you're getting a hybrid ETF, futures ETF at 6,300 a coin. But, Anthony went through a huge amount of shareholder and partner relations and communications and effort in order to buy it at 17 or 16,000. And if he had waited, all those people that were concerned about you, they've all flipped in the past 12 months, haven't they, Anthony? Or at least they are flipping.
Well, they're flipping now. Look at some of them have got FOMO, so they get mad about the FOMO, Michael, as you know. But what I would say, see, I always learn something from Michael Saylor, and so I just want to emphasize something he's saying, because he literally helped me get across the finish line. And I said to my clients, we're going to put this in a partnership because we can't put it in an ETF. And by the time the ETF comes, you will have made so much money that you will be grateful to us. Okay. And obviously we bought some MicroStrategy in that process. But Michael said something very interesting that we have to emphasize. The regulators are moving glacially slowly, but they hopped over something. It's like a rate limiting step in engineering. At 211 degrees, the water's not boiling and it's not changing to gas, but at 212, it changes to gas. And that happened this week. It changed. Michael's letting you know it's not a perfect outcome, but you're now in the zone of acceptance by regulators in the United States, the financial center of the world. And so he's letting you know it's going higher. And now it's up to you to figure out if you want to own it through MicroStrategies, you want to own a synthetic, publicly traded group of securities known as CRPT, which also owns MicroStrategies. You want to own the futures ETF, or you just want to go out and buy Bitcoin. But he's letting you know something that you should really be paying attention to. This asset is woefully undervalued if you understand its technical properties and how it can help mankind delayer levels of third parties in our global system.
And we're going to have to leave it there as we are out of time, but that is a great way to summarize it, Anthony, that this is a matter of choice for the investment advisor. How do you want to engage in this with your client? I think that's really well said. So thank you both to Anthony Scaramucci and to Michael Saylor for joining us on the program today. Really appreciate it, gentlemen. And we'll look forward to talking with you again before too long.
All the best.
So coming up next is our next session, Advisors as Digital Asset Champions, hosted by David Cantor of Fidelity. We're going to leave this Zoom and we're going to go straight into the next Zoom session. I'll see you there.